All right, welcome to our top 5 dividend stock picks for 2023. We're going to go over each of these stocks and why I think they're a good buy. And please remember, I'm not a financial advisor, so this is not financial advice, but I wanted to encourage others to start investing, and I hope you learned something from today's video. That being said, let's dive right into our first pick for the month of March. The first stock we're going to go over is PFLT, which is Pennant Park Floating Rate Capital. They currently have an annualized dividend yield of over 10%. And just this month, they increased their monthly payment, yes, they're a monthly payer, to 10 cents per month, which is crazy. You can yield over 10% on a monthly payer. So, what do? I went on their website and I found this explanation. PFLT invests in middle market companies located primarily in the US, with a proven management team, competitive market positions, strong cash flow, growth potential, and viable exit strategies. PFLT's disciplined approach ensures that investments have an attractive return profile in relation to risk. So, how do they make money? They earn money by charging interest on lent money, and they also earn money charging miscellaneous fees tied to that, but it's a much smaller part of their income. Our next pick is Main Street Capital, and Main Street Capital is a great monthly paying BDC, and that stands for Business Development Company. They currently yield a whopping 6.36% at the time of recording. Their monthly dividend is currently at 22.5 cents and has been increasing annually since they started paying a dividend in 2007. So they have great dividend growth as well. So what does Main Street Capital do? Main Street is a principal investment firm that provides long-term debt and equity capital to lower middle market companies and debt capital to middle market companies. Main Street's portfolio investments are typically made to support management buyouts, recapitalizations, growth financings, refinancings, and acquisitions of companies that operate in diverse industry sectors. Main Street seeks to partner with entrepreneurs, business owners, and management teams and generally provides one-stop financing alternatives within its lower middle market portfolio. Main Street's lower middle market companies generally have annual revenues between $10 million and $150 million. Main Street's middle market debt investments are made in businesses that are generally larger in size than its lower middle market portfolio companies. So, is Main's dividend safe? They have a sound investment strategy, but is this strategy safe for paying a dividend and increasing that dividend over time? Well, I found this information on Google. Main targets lower middle market companies that are underserved by the major lenders, and they are incredibly picky about who they lend to. Their average customer has a debt to EBITDA ratio of 3.0, which means if they could pay the nearly $500,000 per year for the investment grade credit rating, they could go to major lenders for funding. This is where Main shines because these companies can turn to Main instead of wasting their money on getting and maintaining that credit rating. This gives Main access to high quality companies to lend to, which in turn helps them provide a stable dividend for the investors. Our next pick, and my personal favorite, is SPHD. So SPHD is Invesco's S&P 500 high dividend, low volatility ETF, and it is also a monthly payer that currently yields 3.76% at the time of recording. SPHD has held up well during the current market conditions, and going forward, it looks like they may be a great pick for mixed dividends and growth. So, what does SPHD do? SPHD looks for low volatility stocks with a high dividend payout in the S&P 500 and is a great tool to earn a dividend income while not having to worry too much about the total market volatility. So, how does SPHD make money? SPHD is an ETF that essentially means they own many stocks under their single ticker symbol, which gives the investor some diversification without having to purchase all of the current 50 holdings in the SPHD name. Their expense ratio is a little higher than I would like to see it and currently sits at 0.3%. But for the downside protection and great dividend stream it provides, it will remain as one of my top picks well into the future. Our final pick today is Realty Income, ticker symbol O. Realty Income is a REIT known as the Monthly Dividend Company, and they have been paying a consistent monthly dividend that increases quarterly for decades. They have paid 632 consecutive monthly dividend payments and have increased the dividend for 101 consecutive quarters. If there was a holy grail of dividend paying stocks, this would be it. Their current dividend yield is 4.75% at the time of recording, and they pay a monthly dividend of 25.45 cents per share. So, what does Realty Income do? Realty Income focuses on acquiring freestanding single unit properties leased to industry leading operators under long term net lease agreements. So, how does Realty Income make their money? Realty Income uses a triple net lease with clients, which makes those clients responsible for taxes, maintenance, and insurance on the properties. This common practice in single occupancy commercial real estate lowers tenant rents and reduces Realty Income's financial responsibility for the building. Simply put, Realty Income is a landlord and structures the leases so the tenants are responsible for most of the ongoing costs and taxes on the property. This is a strategy that has helped them become one of the biggest players in REITs and by far the most famous REIT because of their ability to return capital to shareholders and increase the dividend over time. This is one that I'm growing in my portfolio currently, and I highly suggest everyone do some more research on because I think they have a lot of potential over the next decade. Alright, guys, that is going to do it for today. If you have 5 picks that you think are better, or even just one, let me know in the comments. And if you haven't liked and subscribed yet, make sure you slap that like button and you hit that subscribe button. We're going to be making more videos like this, and I'm really excited to see where this goes. Thank you for watching. I really appreciate it, and I will see you guys in the next video.